Hi, welcome to the Market Alert for 18th of July 2019. Just to let you know that there will be no Market Alert tomorrow morning. I will be missing in action. So all things being equal, it will resume on Monday. Stocks slump into close as trade talks stall over Huawei. Silver jumps, crude dumps. There will be blood. Too right, there will be. You're going to have to see behind the scenes. Just peel away and have a look below, and you can see there's all sorts of things going on as we discuss in the Market Alert on a daily basis. So let's have a look, see what the Dow did yesterday, and find the right chart. This is the intraday, but let's start off with the daily. We can see the market moving low. We've got resistance at the 27,401. The current all-time high, and I say current because once Powell drops the interest rates, then we can expect to see the market go straight back up. I say if, who knows, he's going to be making this announcement on, I've managed to find this yesterday, it'll be Wednesday the 31st of July, according to Forex Factory at the moment, FOMC press conference, and FOMC statement, 7 p.m, 7:30 p.m. BST there. So just keep this in mind. That's a week on Wednesday. So this gives them time to actually do this, believe it or not. Send the market back down, create some sort of carnage to give him some sort of leverage in order to do it. Actually decreasing rates when the market's sitting at an all-time high is not going to be seen as a favourable thing to do. So if they can cause disruption and prices moving lower in the interim, that will be what is desired to actually then create this same thing once more. And in yesterday's intraday Dow, you can see that once we broke through the 200 bar moving average, it attempted to come back, then the selling came in here, and that was the last time that prices stayed above the 200 bar moving average in the session. You can see it coming back up here, got the battle as we rolled into the cash market, and then prices moving lower, and then more or less trading sideways, and then eventually breaking down as we headed into the close. Overnight the market gapped, came back, filled the gap, and has since also been sideways to higher there at the moment. Today's news, G7, second day of the G7, not really having much of an impact on the market, and that's about it really. We've got retail sales from the UK. These are forecast at minus 0.3 again. I don't know why we bother looking these days, because UK news is used as a counter argument against Brexit, and the US economic news is ignored totally, relying on Trump's tweets to move prices. In the pound, let's have a quick look, see what's going on. The market finding support here yesterday down at the 124.26. A bit of volatility in there at the moment. Let's just drag across and have a look. And you see we move lower initially after the previous day's down day, and then move back to, guess where, the 200 bar moving average. Like a magnet, this line, doesn't matter what time frame or what market. And eventually we break through on the overnight and above the DP level as well. So a bit on the buy side there at the moment for the pound. Nothing to stop it coming back and testing this 200 bar moving average though. And in Bitcoin, yesterday the market finding some support. Watch this for most of the day, and a few trades as well. The market coming down to 8,991. I actually drew this into the chart just to see if the market would actually get to it, but the buying came in here. You can see how the volume increased here quite significantly compared to the previous area here to the left. This put in the bottom of the market, and then prices just made its way back up towards the 200 bar moving average with a bit of a pullback here, and then sideways through the main overnight session with prices coming back through the 200 bar moving average, but with selling pressure, so profit taking going on here at this level at the moment. It needs to close back above this. Failure to do so will send us back to the short side and towards this 8991 that we see in the daily chart here. So nice bit of volatility at the moment in this market. Price is changing quite nicely as the ranges has improved significantly compared to this time last year. A few other things before we conclude. We've got Deutsche Bank still holding above the 200 bar moving average at the moment, considering that a 1 billion euros, dollars is being pulled from this bank on a daily basis by institutions and individuals. Cumulatively $1 billion worth. Amazing how this is being held up. It's no doubt being rigged and held at this level. It has to be when you consider the backdrop to it as well. Implied volatility is down slightly from yesterday, 11.29, 11.14. Still at the average line, but this is indicating that we've got some sort of potential here to see an increase in the down move, the downside, and an increase in the implied volatility. And again, that would tie in with a week on Wednesday's meeting. If we can get the market down and show that there's weakness, then it would certainly help Powell's case for reducing rates. And 10-year back up, well, not up, well, it is an increase to the downside, if that makes sense. 0.08 yesterday from 0.02. Whatever way you look at it, the yield curve is still inverted. Again, recession alarm bells down the line. Okay, so on that cheery note, I will end this one. And all things being equal, see you in Monday's alert, unless something happens over the next couple of days. Generally does if I'm away from the desk. That's tomorrow, so we'll see. But if anything happens, then I could do an update in between as well. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.